How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. If you're new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week for positions that we could place and profit from. This is a great styled video for people who are new to Forex, but also those who have been in the industry for quite some time, just as it gives you the ability to see exactly how I analyze the markets, and also some of the analysis that I have performed, just so you can go ahead and apply them to your own charts and obviously see how we get on here over at LAGFX. So there's a few pairs that I have in mind, and there's a few pairs I'm going to go over in today's video. If you do have any questions or queries with regards to the analysis, as always, leave them in the comments below. And if you do go on to enjoy the video, don't forget to share it and leave it a thumbs up. All the support you guys provide is very much appreciated. So the first pair that we're going to touch base on today is the US dollar to the Canadian dollar. And what we are seeing here at the moment is prices breaking structure to the downside. So that's telling us that realistically this market is bearish and we should be looking for bearish opportunities. You can see here we have marked out the last protected low within the bullish structure that was trading us up and into this area of supply. When supply is introduced into a market, what we can expect is for the supply and demand balance to eventually flip. And when there is more supply than there is demand in a market, the value of that base currency is bound to depreciate. And that's exactly what we've seen. Enough supply was introduced to flip that balance. We have confirmation of that via a break of structure. That confirms that the value of this base currency, being the US dollar, against the Canadian is showing signs of weakness, depreciation. When we look at bearish structure and the laws that bearish structure follow, we understand that what we should see are lower highs followed by lower lows. So this being a low, this being a new low, that's following the laws of bearishness, right? Now we have a high set here. What should follow should be a lower high. So if this was the next lower high, you can see here how we have clear bearish structure. Okay, so what we are seeing is the introduction of bearish structure. We've had confirmation of breaks of structure to the downside to suggest bearishness. So that gives us multiple pieces of confluence to look to go short in this market. Now as we zoom in, we can see that price has traded us into this area of supply, this fractal area of supply that we have found from the impulsive wave that broke the structure initially, and we have been delivered with another break of structure to the downside. So what does this break of structure here confirm? Well, it confirms to us that this initial corrective wave after the higher time frame break of structure has now finished and a new bearish leg is ready to take place. So again, what do? Well, we look at the impulsive wave that broke the structure, i.e. from this high to this low, and we try and find areas of significance, areas of interest that price may trade up and into before trading goes lower. Well, I've gone ahead and marked out two areas that I believe hold great potential, and areas at which I feel price could trade us up and into, break structure again fractally before trading goes lower in this market. So what we want to see ultimately is the bullishness trading goes up and into these zones, for price to break structure, to tell us that the corrective wave has finished and a new bearish leg is ready to take place, and then we would look to get involved somewhere around here, finding a fractal area of supply. So we are literally rinsing and repeating the same process over and over and over again until we are that fractal in the markets that we are able to have a really refined entry with a very large take profit. This obviously gives us the ability to have great risk-reward ratios, and in return gives us some amazing rewards from the position that we're placing. So I am simply waiting now for price to trade us into one of two areas of interest. Once we are delivered with the confirmation entry that we need, the entry confirmation, should I say, that we need a break of structure to the downside, that's when I'll be looking to get involved in this market. So what I'm going to go and do for you now is just mark out these two zones as areas of interest, and then you guys can go ahead and mark them out for yourself. This just gives you an area that you could potentially look to enter in from. Now, if you are someone who is quite preemptive, and if you are someone who is quite aggressive with your approach to the markets, you may just want to set two pending orders. A pending order here or here, and a pending order here or here. This giving you the opportunity to obviously get involved from both zones. Now, if this zone is absorbed, your stop loss is more than likely going to be hit. But then what would happen is price would trade into this one, and we'd hope that enough supply would be introduced to give us that flip to the downside again. So we would suspect that you may lose from this one, but you would win from this one. There may also be the chance that price just trades up into this, enough supply is introduced from this zone to give us that reversal, so you're not missing out. Now, there is a third potential, and that is that price just absorbs straight through both of these and continues trading us higher, in which case we would be waiting for price to trade us up and into this higher time frame area of supply. So there obviously is a risk in placing those pending orders, hence why I wait for further confirmation before I enter in on any market. So I will be waiting for that break of structure initially before getting involved, but you could set pending orders there in hopes of profiting from a down move. And you can see, like, you know, even if we were to be more aggressive and less specific with our entry points, we could still walk away with some crazy returns here. So you can see this would still be a 1 to 15 if we did the same here. Slightly larger stop loss, but in return our take profit can be stretched. We still walk away the 1 to 9. So we're still looking at some brilliant returns from this market. So I'm really excited to see how this market plays out in the coming week. Okay, now moving over to the Australian dollar to the US dollar. This is another market I'm wanting to see price trade lower from. So this market is actually contradicting the first pair we've looked at. We are expecting the US dollar to be stronger than the Australian dollar. However, in the previous market, we were expecting the Canadian dollar to be stronger than the US dollar. So we're not contradicting ourselves exactly, but we are saying that we want the US dollar to be stronger than the Australian dollar, but we don't want it to be as strong as the Canadian dollar. Take that information as you will, but I am essentially just looking at price action and my technical analysis. My technical analysis is suggesting that we could see price break down to trade us lower. So we wanted to see the exact same thing. I've marked out the last protected low within the bullishness that traded price up and into this area of supply. I want to see price now break down, breaking structure to the downside, giving us the confirmation of a reversal, a distribution to take place. We would simply wait for price to pull back, as I've marked out here, before a move to the downside. Again, this is a market that has been trading us bullish for some time, has recently traded us into an area of supply, and then you can see here how we've been delivered with multiple breaks of structure, both fractally and on the higher time frame. So it'd be very interesting to see how this plays out. But I've gone ahead and marked out this zone. We are simply waiting for breaks of structure, entry confirmation initially, essentially, should I say, before entering in on this market. So there's no zones or areas to be specific with at the moment, as we are still waiting for that break of structure. But this is another market that I'm wanting to see go short. Okay, now I'm going to finally touch base on the Euro US dollar, and then I'm going to do some exclusive analysis for the guys in the Learning Lounge group chat. So if you aren't involved in the Learning Lounge group chat, it's completely free. Link will be in the description. Simply click on the link, it'll take you through to our Telegram group chat, and on there you should see an exclusive 5 to 10 minute long video on the NAS 100, and I might touch base on XAU USD as well. So just to finish off on the Euro US dollar, this is another market I'm wanting to see go short. We have got two areas of interest here marked out. Price has traded into this one. We are seeing some good signs of rejection. In order for me to get involved in this market, as always, we want to see relevant breaks of structure and order confirmation. So a break of structure here would definitely confirm a reversal, as this is the last low that created the highest high. We could actually say that this one was here. This move right here was due to fundamentals. So we could go as high as this point, but if we really wanted to be safe, we could go from this point. So it's up to you on how preemptive you want to be. Both of these are protected lows within this bullish structure. So breaking either or would obviously give us that confluence. The reason why we can mark this one out as well is just because this is a low that has been set, and that this low set this highest high here. Now from here, obviously we want to see structure break to the downside. Once we've had that, we want that pullback, that corrective wave followed by a fractal break of structure, and obviously as follows, a bearish move to the downside. Now, if we aren't delivered with relevant confirmation and we continue to see price trade higher, then that gives us the impression that price may be trading up and into this area of supply that I've got marked out here. And hopefully that will give us enough supply to see price trade us lower. Now, there are many tools and ways that we can look at this market, but if you are familiar with my strategy and you are familiar with me as a trader, you'll understand that my charts are extremely naked and I look purely at price action. As we understand, supply and demand is the balance in everything in life when it comes to buying, selling and trading. And this is how we should look at the markets. Now, as I say, there are other tools that we could use. We could get the Fibonacci tool out. We could look at the MACD. We could get Bollinger Bands out. We could get all of these tools out, and they will give us additional confluence. But we should always be looking at the markets as supply and demand and price action. Now, you can see here, we have the 50, the 38, and the 61. Price has traded perfectly into the 61.8, and we're seeing price begin to move lower. So this is another piece of confluence to suggest that our analysis is correct. We could also get things like the MACD, so the moving average convergence, divergence, and we could look at this and say, well, we've had the crossover here. So this again suggests bearish structure, and it's above the neutral point. So we could say, yeah, this looks to be giving us the suggestion that price could be going bearish, as well as the confluence that we've got from the Fibonacci and price action itself. So there are plenty of things that you can use and tools that can be used, but ultimately we should only be using those as additional confluence, and we should be looking at the charts as a whole through the eyes of price action. So as I say, we want to see breaks in these structural points to suggest the strength in supply before we look to go short in this market. But that is that's going to summarize my segment of this Sunday sessions video this week. I hope you guys have enjoyed. I hope you have learned a thing or two about my strategy and how I like to tackle these markets. As I said to you guys at the start of the video, if you have any questions, any queries with regards to the analysis I've gone through today, leave them in the comments below. And if you did enjoy this video, please share it with your friends, your fellow traders. You can share it on your Telegram group chats, your blogs, whatever it is that you use. And don't forget to leave the video a thumbs up so it gets out to the people that need to see it. Now, with all of that being said, I'm wishing you guys a very profitable week this coming week. And I'll catch you all in the next Sunday sessions video.